You are listening to ChartingWealth.com for Thursday, the 28th of January, 2016. It's good to have you with us today. We are reviewing the charts. What do we always start with? The total market is represented by IYY, an exchange-traded fund that tracks all the stocks. What do we see happening? Well, it was a down day, 1.14%. Now, what have we been talking about? We had our two-day trend line breached back on the candle, and again, we look at the two-day candles first, so back on the 25th, and it continued to move sideways, actually some down movement over the course of the 27th, and that two-day candle that is wrapping up at this point. And what do we see? Well, we see down movement. Now, if we go to our half-day chart, which is of course the quarter size of a two-day chart, we can see what happened intraday. What we see happening is an up move in the morning, down moves in the afternoon. We do see and this is folks what we've been looking for, we've been waiting for, a dead cat bounce to see after the four-day chart rolled over going up back on the 12th. It moved up, then sort of sideways on the 25th and 26th, and then has started its move down, possibly. The derivative oscillator is getting lower, it's getting smaller, it's reducing in its speed, and it's oscillating. And we see the MACD actually moving toward the signal line. Now, if we see a cross going down, that is our trigger to get into a down move, because the short chart will be rolling back and moving in the same direction as the down movement on the two-day chart. Will that happen? We don't know. I'm not a prognosticator. I don't read the future, but I know to look for that, to see if this ends up being a dead cat bounce. If you consider what's happened over the last 4 days in the market, big down movement on the 21st. Then as the week opened on the 25th, the two-day candle there, you had the market move up some, but it never approached the beginning down drop on the 21st. And then on the 27th candle, it moved down. So we're waiting to see if we're going to be able to do a virtual trade in the opposite direction on a down move, okay? A down move. When I say opposite direction, we're talking a down move on the total market. Now, remember, all these charts we talk about, total market, S&P, the Qs, all of those have inverse funds, as does gold. Gold actually was up today. We're looking for up moves in gold, not down moves, because it moves in it's contra to the moves in the market. Typically, gold is something that when the markets are doing bad, people go into gold. And it's interesting that gold is going up today as the markets go down. So let's look next on the two-day chart at the Qs. And again, see what's happening with the Qs. Chart looks very, very similar to the total market. Did I just say the Qs? I'm sorry, SPY, which is the Standard & Poor 500. And what do we see going on there? Again, the sideways slide. Remember, the S&P 500, SPY, tracks what? Well, it tracks the Standard & Poor 500 big companies that are a lot of the volume of the market. That's why sometimes the chart pattern many times looks similar, not the same, but similar to the total market. Total market was down 1.14%. SPY, the S&P 500, was down 1.09%. We look at the half-day chart. We see the same kind of thing, derivative oscillator losing speed. MACD appears to be coming together, a spinning top, which means lots of indecision on the afternoon candle for the 27th. Now, let's go to our two-day chart. Again, we're looking for the same kind of move, a potential dead cat bounce and a resumed down move in the market with a crossover on the four-day chart. Hadn't happened yet. We're looking for it. What happened with the Qs today? Down 2.49%. Big down move. Derivative oscillator has been losing some of its steam the last few days on the two-day chart. But the two-day chart started moving down on the Qs way back on the 4th of December. You know, you thought the market, did the market just start going down on the 4th of January? No, it started going down. Our indicators showed us what was happening way back in December. So keep that in mind. One good reason to learn how to read a chart. And we see a spinning top on the two-day candle, lots of indecision. Again, we don't have any triggers yet until we look at let me tell you, for those listening by audio, what do we see on our 4-hour chart? We see the MACD getting close to the signal line. Derivative oscillators lost a lot of its speed. Big down candle in the afternoon. We're going to wait and see if indeed we get a crossover going down. That will be our trigger to get into a trade, again, virtually, like QID, which is a double inverse of the Qs, which is the NASDAQ 100. Means that it goes up when the Qs goes down, QID. You can take a look at that. That's the symbol. Q is in Quebec, I is in India, D is in Delta. Now again, we're talking about virtual trades because we're not a stock calling service. We don't charge anything for this. We are training. We want you to start learning how to read a stock chart, doing practice trades. And then when you figure out enough from reading, from studying, from being with us day in and day out, and you want to start making your own decisions with your own money, that's your business, not ours. Okay, now lastly, I'm going to range back out to our 2-day chart, and we're going to look at gold. Up 0.37% for the day. Remember, we crossed over going up on gold back on the 14th of December. It really slid sideways for a while and started taking off as the stock market indexes started crashing. Gold started moving up, big up moves over this last 2-day candle. When we turn around and look at our 4-hour chart, half-day chart, it is beautiful, is it not? Rolled over going up on the 20th. If you'd have gotten in then right at the same time, the derivative oscillator, we like to see across on the MACD and derivative oscillator flipping over right about the same time. Slid sideways for a day and a half or two and then started jolting up. You'd have done very nicely in a virtual trade in gold, getting in somewhere around, 105? About 10, no, you wouldn't even gotten in at 106, about 105.30 or 105.50, already up almost actually above $2, almost $2.50. So pretty nice, pretty nice. Again, gold was up 0.37%. So hope those of you who like gold and want to learn to trade gold, we're practicing on GLD. Remember, when gold rolls over and starts going back down, you can get inverse gold. But right now, GLD is looking sweet. Now, if you've not gotten in gold, getting in now, you missed it. The move up was back on the 20th. And again, remember, when you have moves in the shorter chart, parallel moves in the big chart, that's when you want to look at getting in. That's when the getting's good. That's where you take that nice chunk of change that comes in and you try to minimize your risk. Because the first thing we want to do is preserve our capital, albeit virtual capital. Thanks so much for listening to chartingwealth.com. You have questions, concerns, issues, problems. We love to hear from you. Please go to our website, chartingwealth.com, sign up for this newsletter. Sign up for our newsletter. You'll get this video, audio every day. Go to Facebook, like us there. Go to Twitter. Hey, follow our podcast on iTunes. Give us a 5-star rating. Say some nice things about us. We do this for free. Help us out. Thank you so much. God bless you. Let us know what else we can do from chartingwealth.com.